back to Cryptosmart Analyst. So today I'm going to be talking about the amazing updates we just have on STIC version 1. Yeah, if you're looking at the screen right now, you're seeing the colors. It's looking gamey, right? Looking beautiful with the colors and buys entries and the exit entries. So if there's something you notice right now, you see that initially we tends to have some noise. That is the some unnecessary entries and exits for buys and sell, which are sometimes not valid. So one of the things I've done is to fine tune it to ensure that the only plotted buy and the only plotted sell you see are the valid ones. Okay. So if you look at the screen right now, you see them there. So I'm currently on Solana right now. So let's see Solana. Let's see. Okay, I'm currently on Solana. Let's see. Let me do a playback, a replay of what has been happening and how I've been taking advantage of it. So we had a shot here. We had a shot that started from here. I think I shorted this one. We would have been out of the market though. But so another amazing thing before I go further, another amazing thing that we just added is the liquidity on ten. Yeah. So one of the things if you're as a smart trader, you know that exchanges and smart money tends to track they want to get you liquidated, they want to get your money. And one of the things I've included is it's the more like an histogram that labeled your liquidation regions. Where the liquidities are. So if you know that the smart money are going to launch your liquidity, then you want to move your liquidity to where you want to move your entry to where the liquidity are. So right now, if you see the greens are the liquidity. I'm currently on daily time frame. So the greens are the liquidity for buy. That is for those that are longing. This is their liquidity. This is their liquidation spots are what you're seeing here, where the liquidity really relies. So resides, that's what you're seeing here. And for the purple above, you can see the magenta color. That is where the liquidity is. So you can see that for Solana right now, we have immediate liquidity at 150. Yeah, there's immediate liquidity at 150.48. So there's a major one. You can see is a long. It's not very long, but it's long. Compared to this, is like the same height with this liquidity. We have a liquidity here, we have a liquidity here. So we can see that it's projecting to want to capture this liquidity right now. So if you capture this liquidity, then there's a potential that it's going to be a reversal, because the next liquidity we have after it they are not as much as the liquidity we have below. So the market tends to move to where we have larger liquidity. So you can see we want to probably take out this liquidity first before we come back to possibly retake this. And we can look at the market right now. We're just above the market flip line. That's the yellow line. So another thing I've removed from, that's on version 2, but this is version 1 here. Let me stick to version 1. So version 1 here, you can see where the liquidity resides. You can see the valid sell. So you got a sell alert here. So since then you got a sell, we're just getting a buy right now. Now the candle is here to close. The candle is going to close in the next 10 hours, 20 minutes. So it depends on when the candle closes. If the candle closes above if the candle closes as a buy, then that means you should take your profit and just get out of the market. But if the candle is yet to close, we still have about 10 hours to decide. So you have to wait for confirmation. You can probably scalp your profit or take some. For me, once I get like 2x, like here, I will have taken my profit. At least take partial profit, like probably 70% or 50% of my profit I've taken it here. So I'm currently having like 25% left or 20% left, waiting to probably continue trend or just get me out in another profit. But that is what I tend to do. So you have it there. Another thing, there's something that happened here that you might not. Okay, let's see. So we got a buy here. We got this buy. Then the market was bullish. We have extreme level 1, extreme level 2, take some profit. So let's say I end up taking my profit here, or I end up taking my here, and I open a short. So this is potentially going to be a negative. So depending on the time frame, one of the things I also tend to do is I open my entries on a lower time frame and my exit on a higher time frame. Let's say you're trading on 4-hour time frame, you want to open your entry on probably 15 minutes time frame. A multiple of hits. Like I said, the market is still we are still looking for the liquidity here. So the market is potentially going to come to 150 before potentially reversing. So that's a resistance though. Okay, so you got a short, let's say we have a short, we got to exit. This is like negative. It's going to close. It's not going to close you at stop loss, depending on where you put your stop loss anyway. But it's going to close negative. Then we get this now. Another thing you need to look out for is this yellow dot. So these yellow dots are also exits. Those yellow label are also exit. They are short signals. Okay, then if you have the blue are also entry signals. So if you're longing, you can also use this one as a take profit. I mostly use that take profit or exit, or mostly reversal position. So you have a short, then if I'm longing here, I want to exit here because the market is already the market is already turning gray, indicating that the candle is turning gray, indicating that the market is potentially turning bearish, but we still remain yellow. Like I said, yellow is bullish, blue is bullish, red is bearish, white is bearish, and gray is in between 50-50. So it's like indecisive. So the market is yet to decide. But once you get a white, that's bearish. So you got a white, you got a red, and now the white actually closed below my market flip line. So closing below my market flip line indicates that there is a bearish sentiment. So the market closed, and that's me. I close out my long and I open a short, and we got a short, and here we can exit here. So we exit here and wait for entry again, or let's say we enter again. We got a first entry here, second entry here, then we exit again, because the market rejected the market flip line. It tested and rejected the market flip line. And you can see the market rejected it even while still being bullish. Then before we turned yellow again. And you can see we got a sell. So you got a sell, you take your sell, you have a valid sell, exit. So it continues like that. And one of the things you see we have buys, and there was no sell until we got a sell here. So one of the things, like I said, you don't want to be too encumbered with the market. Like if you're trading, I tend to use potentially 2% of my profit. Yes. So let's say I'm trading 2x. I'm trading for 2% of my profit, 2x of my entry of my risk. So I'm risking just 2. So at 1 point. So once the market gets to this region, I'm already out with about 70 or 80% of my profit. I've already taken profit out when you get market to this region. And I'm just holding and longing, moving and longing with 25% of it, which is going to take me out around this region or here. So that is how I tend to use STIC version 1 if I'm using STIC version 1 alone. I'm not going to be talking about STIC version 2 here. So this is just STIC version 1, how you can use it. So you can see here we got a short. Like I said, we have liquidity here, and the market, you can see we're at 146 before, we're currently at 148. It's coming, is actually taking part of the liquidity right now. If you zoom in a bit, you see that we're actually taking it, almost taking out this liquidity. Like I said, the thicker this histogram is, the longer the more the liquidity. So the thicker, you can see, it's thicker than this and it's longer than this. That's why we say there's more liquidity here. And the market tends to flow towards where there's liquidity. Okay, market to flow towards where you can find liquidity, because that's what smart money do. They look for your money. So that's that's potential around your liquidation prices. So basically, there are a lot of liquidation price here. That's why we have longer this thing. And we look at, you can see trading on daily time frame basically means I'm on the higher time frame. So on a daily time frame, we tend to have more liquidity. So we have less liquidity above than below. We have more liquidity. So you can see we have liquidity around 95. We have liquidity at 107. We have liquidity at 115. So we have a lot of liquidity around this region. So there's a potential. There's no guarantee, but there's a potential the market makers will. And don't forget that this liquidity can also change. So as the market keeps going uptrend, people start probably taking liquidity, and you start seeing this upper liquidity, the bearish liquidity. You start seeing it growing. Now, if the market now we can see that we have more bulls here than bears. We have more bulls than bears right now. So the market wants to, the market maker, the smart money here, we want to go and take out they want to take out they mostly do what we call a contrarian trading psychology sentiment. Basically they trade against the market. So when the market is fully bullish, they try to flip against it and be bearish. If the market is bearish, they flip and be bullish, so they can take out your liquidity. So when majority are bullish, that's why I always talk about contrarian. Like When majority are bullish, be bearish, and when majority are bearish, be bullish. So that's basically how you get to use the STIC. And if you want to disable any of the alerts, you can easily go to the settings. Let's say I want to disable my PD. Or probably when you're merging, right? I mean, when I merge STIC version 1 and version 2, yes, I'm going to show how to do that. And another thing you can do with STIC is to set your alerts, yes. So you can set your trade alerts. So STIC version 1, B1. I want to set alert for buy potential. So I have a buy potential alert, put it to once per bar close, and you can see we already have the alert details set for you. You can edit the message anyway. So once you set it, you can see your alert here. You can see my alert is going to show here now. Good, this is it. This is the alert showing right now. The train has stopped. I don't know why that is. That's a TradingView issue. I might need to probably refresh my tab to do that. Okay, so it's going to reload anyway. So you can see that's how to set your alert. You can set for sell. I'm currently setting alert for version 2. So that's what I'm using for, because I'm projecting automation for version 2. So that's what I'm using right now. I'm going to be deleting this. So that's how you set your alert for STIC version 1 and STIC version 2. If you have any other question on how to use it or how to blend it, just let me know. And before we end this, I think it's going to be doing a giveaway on the 22nd of July. There's going to be a giveaway for 2 people, basically 2 people. I'm picking 2 people that are going to the criteria is for you to make a 5-minute video about actually explaining how you can use STIC version 1 or version 2, or you can use both of them. So you don't need to show your face. No, it's not needed. If you want to find, if you don't, it's not compulsory. Then you make a 5-minute video showing then we're going to put the video to the community to vote, to pick whosoever. I mean, you have to probably get people to vote for you, but they need to understand at least we need to validate that they understand what you're explaining. So basically explaining how to what I just did, explaining how to use STIC version 1 or STIC version 2. Then we have a price of $40 and the 1 month free access to STIC version 1 and STIC version 2. So that's the contest that's currently going on right now. So you can join our Smart Analyst Global community on Telegram to participate. Drop your video we have a community there. Yeah, you can drop your video under this message. Yeah, just drop your video on this message, and we're going to get the company. We're going to start counting from here. This contest is going to end on the 22nd of July. So if you want to participate, you still have time. You have about a month to prepare, about almost a month. Yeah, it's not up to a month, but almost a month to prepare to actually be part of it. So that's one of the things we're doing right now. So if you want to benefit, we have the total value of the giveaway is about $260. So you don't want to miss it. Anyway, it's a very good. It's just an addendum to your trading capital, basically, or whatever you want to use it for. It's just more like an airdrop here. So take advantage of it, and let's see how it goes. Like I said, if you have any question, don't forget to ask. You can ask in the community, or you can drop a message at the base of this video. So that is how to use STIC version 1. I think I covered everything. I think I already covered extreme level 1, extreme level 2. Those are market extreme levels. And we have your take profit. So STIC is like very user friendly. I'm also looking out for your videos. You can post your video on YouTube as either as public or as unlisted. So you can post on YouTube either as public or as unlisted, and we'll be able to review it. And said it should not be private. It must not be private. It must be on either unlisted or public. It's up to you. So that's it. So see you next time, and have an amazing trading experience. And don't forget to trade smartly. See you.